With CPI data coming out relatively bullish, the traditional markets have seen a strong move toward the upside. However, cryptocurrency and Bitcoin are still lagging behind. Could this recent move for the S&P 500 be built upon irrational exuberance, or does the move have merit? In today's video, we're going to be reviewing the economic data, the correlation between traditional markets and Bitcoin, the short-term time frame price action, and the next move for Bitcoin. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. I hope you're all having a fantastic day today. We're here to take a look at Bitcoin. We're going to be discussing Bitcoin from a small time frame perspective, discussing the next move. We're also going to take a look at the overall correlation between Bitcoin, cryptocurrency, and gold. We're going to be discussing in massive detail what the correlation means and the limitations of the correlation. We're going to be discussing as well the economic releases being CPI, PPI, and interest rates, the impact these have had on shifting the market risk and potential future price directions as a result. So we do have a lot to get into, but we'll get stuck into it. Now, before we do, smash the like button, hit the comment button, and subscribe to the channel. All that goes to support the channel and help get the content out to more viewers. If you're interested in joining our Telegram, where we post all our updates and charts, you can find that at the second link down below. We focus on the facts, the data, the technical and structural levels, no hype, no emotion, no BS. In this Telegram, you'll find everything from educational posts to videos to news events to updates, everything you need to stay in the loop with Bitcoin, cryptocurrency, and the economy as a whole. If you're interested in joining our trading channel, where we post trading signals daily with entries, targets, stop losses, justifications, and exclusive analysis, you can go ahead and do that with over 594 members in there now. If you want to join that and get access to not only the main channel where we post our trades, but also the additional group chats with all of our members in here discussing trading and so much more, you can go ahead and contact me via the pinned comment in the free channel. Here it is. You can go ahead and find more information right over there. Let's get into the video, guys, starting off with the market data. So for now, Bitcoin is up. Well, it is actually down, 4.61% for June. We're about 14 days into June. We still have the biggest events coming up being the interest rate hike and PPI. So the market can shift quite rapidly in the next 16 or so days. So we do have to keep that in mind. Looking at 24-hour volume, we're up around 18%, sitting at 66 billion. 24-hour liquidations sitting at 67 million, up 29%. And overall, guys, the volatility index has not really shown any adjustments. Looking at the 30-day, looking at the 60-day, we can see ever since that large move toward the downside a few days ago, the volatility index has more or less plateaued. And again, this is expected as the price action has done nothing really that much besides sideways consolidation. The crypto space has been quite boring. Looking at the liquidations, we're going to see 67 million in liquidations, split almost 50-50 between shorts and longs. Let's go ahead and take a look at the DXY. So as you would already know, the CPI data came out. It actually came out surprisingly bullish. And we discussed this yesterday. We said anything between 0.3 down towards 0 is going to be relatively bullish. Anything under 0 is going to be incredibly bullish. So we saw a relatively bullish result for CPI. And I would say this is an unexpected result considering the fact that pretty much every single news event we had in the last 6 or so weeks, I'm going to show up over here, was signifying rising inflation, right? We had core PCE, we had personal spending, we had employment, we had income, we had NFP, we had the prior CPI, the prior PPI, all indicating inflation was rising. But now we have seen inflation's drop to 0.1%, or it has only risen 0.1%, which goes to show that there is something going on here, because 1 + 1 = 2, it doesn't equal 3. The data doesn't line up. It doesn't make sense. But it doesn't matter what makes sense or what doesn't make sense. The market is going to take this at face value, and it is going to adjust its risk, the market risk, based on what the data we're seeing here. So inflation came out at 0.1. That is perceived to be bullish. That is a good thing. It means inflation has dropped back down from the recent rally that we saw the last month as a result of printing to help bail out the banks. That could be an indication that inflation is becoming under control again, which gives the perception that we could see interest rates actually move towards a pause, which of course is incredibly bullish. So as a result of that information, the DXY saw a small move toward the downside. In fact, the DXY is now retesting / breaking below the uptrending support. We do need to close a daily candle below this level to confirm a breakdown, but as you can see, it is retesting that daily uptrending support. A loss of this level puts the DXY at risk of a further correction towards 101 to 102. If we do manage to hold up that level, the key resistance we need to break above is of course going to be this downward sloping diagonal resistance, in which if we do break above, the markets will drop and the DXY will rise back into this resistance. Looking at the S&P 500, we have seen a nice strong move toward the upside. Ever since we had a weekly candle above this resistance, we have basically been nothing but up. Moving upwards to 4,400, looking at a next target somewhere along this uptrending resistance line where we do expect a rejection and potential continuation downwards. If we do look at the S&P 500 from a structural perspective, this structure is a bearish structure. This is a rising channel formation, and therefore it should be assumed that price will remain upwards until the uptrending support is lost. So when this uptrending support is lost, the price should correct. We are looking for weekly closes above this level to invalidate this structure and continue upwards, and weekly closes below this level to validate this structure and continue toward the downside. The Dow Jones is in a very similar position, but instead of retesting that upward diagonal resistance, it is retesting its major yearly horizontal resistance right over here. We've seen numerous rejections from this point, and it is now currently retesting again. A weekly candle close above this level is going to be essential for the Dow Jones to continue toward the upside. Now, before we get into Bitcoin, because there is a lot to talk about Bitcoin, I want to be discussing the correlation between cryptocurrencies, stocks, and gold. What the correlation means, why we have seen the stock market actually move upwards in the last few days, and why we have seen Bitcoin move downwards as a response. Is the correlation stretching thin? Are we seeing Bitcoin no longer become correlated to the stock market? Or is something else going on? Is there something else to explain all this? So let's go ahead and take a look at this chart. This chart represents the correlation between Bitcoin and the stock market on a higher time frame. The blue lines being Bitcoin's price action, of course, is the Brave New Coin Liquid Index, and of course, the orange line representing the SPX or S&P 500, okay? We can see under over here, we have our histogram. This represents the correlation coefficient, meaning the correlation between these two assets on a daily basis at any given time. As we can see, the correlation coefficient is quite up and down, right? We go from plus 0.8, 85% correlation, closer to even sometimes a perfect correlation. And we have even seen lows of negative 80%, meaning a negative or an inverse correlation, a strong inverse correlation. But what I like to tell you guys is the correlation coefficient isn't a linear method, meaning there are limitations to this method that we can't see on the charts. There are reasons why price moves sometime more so than just the fact that it's correlated to an asset. I'm going to get into that a little bit more, but I want to talk about this chart over here because what we have seen recently is, of course, S&P 500 blow upwards and cryptocurrency basically just been grinding downwards ever slowly. And people are starting to say, is Bitcoin depegging? Is the correlation stretching thin? Is this the end of the correlation? But the answer is simply no, and we'll go ahead and show you why. If we take a look at the overall correlation between cryptocurrency, between stocks and assets, to understand what a correlation is, we have to understand, I guess, what a correlation is and what is actually happening behind the scenes. So to do so, we need to look at this chart. And this chart simply shows us what drives correlations between assets. And to understand this, we need to tell you this. We have a market. In the market, we have different assets. We have stocks, we have crypto. So let's say this is crypto, this is stocks. These two assets are indirectly correlated to one another. They're indirectly correlated to one another because they both reside within the market. Now, the market has its own risk. There is its own perceived systematic risk of the market. The market risk is determined by specific elements such as interest rates, inflation, taxation policies, economic policies, government policies, and societal perspectives, right? A lot of this, or the market risk, is determined by the cost of debt and interest rates. Interest rates directly influence the risk of the market. If the risk of the market goes up, as a result, the overall risk of both assets go up. If the risk of the market goes down, the risk of these assets overall go down and they both continue upwards. So what it means is the risk of the market sets the precedent of overall macro direction. So if we go back to this chart really quickly, you can see that is why these asset classes, although on the intraday movements aren't directly correlated as per the correlation coefficient, the higher time frame movements are very much correlated. We can see high time frame uptrends, we can see high time frame downtrends occurring at relatively the same time. Because there are two elements of correlation. There's market risk correlation, and then there's individual asset risk. This is where it gets a little bit more difficult and confusing. If we take a look at the individual asset risk, we do an initial or individual assessment of perceived systematic risk for each asset within a market. So although the market risk determines the general direction or general likely direction of these assets at any given time, each of these assets undergo their own systematic risk or their own risk assessment. If we take a look at cryptocurrency, cryptocurrency may be in a market that has positive risk, meaning it is likely to move upwards. However, due to any of these reasons here, the systematic risk for cryptocurrency could have risen, okay? Whereas for the stock market, it could have dropped. This discrepancy results in a decrease in the correlation. So to put in perspective for this time, we have seen the DXY drop, right? We saw the DXY drop, we saw CPI drop. If we look at the market risk, we can see interest rates and inflation equate to systematic risk. Therefore, if both of these have fallen, the market risk has fallen. Therefore, there is an overall precedent that every asset in the market is more likely to move upwards since the market risk is falling. So, unless there is an individual impact that on these individual asset classes that could shift that direction, it is more likely that the direction of these assets will move with the risk of the market. But in this instance, we saw Bitcoin, or should I say, Binance and Coinbase sued by the SEC. That plays a massive role because particularly for cryptocurrency, that could influence the overall perceived systematic risk for this individual asset class. That results in, look at this, societal perspective and government policies resulting in increased perceived systematic risk for only cryptocurrency. So if the increased perceived systematic risk is greater than the overall market change or risk change, the asset price will move at a inverse correlation to the market. And that is what we've seen. That is why we've seen cryptocurrency move toward the downside / move sideways here, and we have seen the stock market move upwards. It's not because these are not correlated. These are indirectly correlated and they are tied together based on the market risk. They are correlated towards market risk. And because they're both correlated towards market risk, they are thus correlated to each other. So it's not that we have seen a lack of correlation or a detachment of correlation between these two assets. It's because when we're looking at these assets as individual assets, there are elements of risk or elements that can actually influence the potential price action for these assets, even though the market risk holds them together. So going over one more time, we have seen the overall higher time frame correlation for cryptocurrency and stocks be relatively good. If we take a look at the correlation between cryptocurrency stocks and gold, there's actually been a historically greater correlation between the stock market, S&P 500, and cryptocurrency than there has been with cryptocurrency and gold. In fact, there's been a significantly greater correlation between those two than gold itself, which is a very interesting thing because people like to say Bitcoin is more correlated to gold, but the data actually reflects otherwise. Moving back to this chart over here before we get into Bitcoin, this chart represents that within a market, even though the market sets the overall risk for these assets and therefore the higher time frame direction, on any daily move or any weekly move, there can be elements that influence the risk of a standalone asset in the market. And if those elements of risk shift the perceived systematic risk against the market risk, we can see those individual assets underperforming or overperforming in comparison to their comparable assets within the same asset class or market. And that's why we've seen cryptocurrency lag in comparison to the S&P 500, even though the market risk has fallen. So I do not think cryptocurrency is depegging. I do not think that correlation is detaching. All I see right now is standard market practice. We have seen this happen time and time again. If you take any short-term movement on cryptocurrency in comparison to the stock market, we have seen periods where cryptocurrency has massively overperformed the stock market. We have seen periods where cryptocurrency has massively underperformed. And these Overperformance and underperformance sections aren't as a result of depegging or lack of correlation, because the correlation is indirectly attached to the strength of the dollar and the cost of debt and the market risk as a whole. The correlation isn't direct. It is not a direct correlation. More, however, it represents a period where the systematic risk in that particular asset class has fallen more so than the other class due to economic policy, societal perspective, all that kind of stuff. Okay, I'm going to sum it up there. Let's go ahead and get into Bitcoin. Talking about Bitcoin, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. You can see Bitcoin is still in that daily downtrend, guys. We do need to break above that daily downtrend to see the price go upwards. Until we break this daily downtrending resistance, we are technically in a weak bearish trend. It is technically downward. It's not looking ideal for Bitcoin here, but if we do break above that daily downtrending resistance, we will be entering a daily uptrend. If we do break into a daily uptrend, the weekly trend will flip back bullish, and we're more likely to continue even higher. The key levels you should be watching for are, number 1, this current support level we're retesting between 25.8 to 26. Number 2, the weekly support level between 24.4 and 25.2. And number 3, the downtrending resistance represented by this black line. Furthermore, if we do want to see the daily trend turn bullish, not only do we need to break above the black line, we need to break above this momentum resistance. This represents a shift in momentum or a momentum resistance on the RSI. A break above this level will represent a positive shift. A positive shift meaning the metrics of price action go up, meaning the strength of price action becomes positive. Metrics being momentum, volume, liquidity, velocity, speed, so many things I can mention over here, guys. If these go up, the strength of price action thus goes up. The price is more likely to move up. So talking from a probabilistic standpoint, the probabilities are in favor of a move toward the upside that will continue into a weekly, potentially macro bullish movement if the price is able to get above this downtrend resistance and if the RSI is able to break above here. Now, we are not on a weekly bearish trend just yet. The weekly trend is still technically bullish, although it is significantly weakened. The weekly trend will turn bearish when the price loses 24.4 thousand to 25.2 thousand. That is our weekly trending support. You can see we entered a weekly uptrend when we broke through it, and therefore when we lose it, we'll break that weekly uptrend and move into a weekly downtrend. Moving over to this chart here, we can see if we do look at that weekly chart, wrong button over here, guys, sorry. If we do look at that weekly chart, we can see the price has actually lost that 200-day moving average, represents a weekly shift in strength. However, that doesn't mean we are in a weekly downtrend. It just means that ever since we broke into that weekly uptrend, which is over here, we are now significantly losing strength. So that weekly uptrend that we had was strong, and now it is weak. It is a weakening, or it is a weak weekly uptrend that could potentially result in a weekly downtrend if that lower support level, which is holding the trend upwards, is lost. Furthermore, for the weekly trend to turn bullish again, we do need to break back above that daily downtrending resistance represented by this black line, because if we do shift the daily trend bullish, that will push the price upwards enough to then flip the weekly trend bullish. The weekly trend becomes strong bullish again once this Gaussian channel upper band resistance is broken. If we do see a break above here, it is incredibly likely the price will continue toward the upside, potentially all the way to around $48,000. So watch out for that. Let's go ahead and get into the short-term time frame. So undoubtedly, we are still very much holding on to this lower support range. As you can see, our major support is over here. This is going to be the 25.2 to 26 to 25.8 25K support level. You can see if this support level is lost on the weekly chart, we will see an inevitable move toward the downside. We have not yet lost that level. If you look at the daily chart here, we are still hanging on. If we look at the weekly chart, we are still very much hanging on. You can see 3 to 4 candles over here, long wick candles, small body candles, a lot of consolidation, a lot of compression, a lot of indecision happening at this level. An incredibly strong support. If lost on that daily, if lost on that weekly, we will see a move toward the downside. So until then, we are still under major resistance points. We do still have a lot of resistance above us that is going to prevent us from moving upwards. We'll get into that in a smaller time frame in a second. But to just identify these key levels of resistance on this chart, you can see the next major resistance sitting above us is going to be represented by the 26K level. We've said if 26K is lost, the 26.2K to 26.4K level, this level over here. If this level is lost, we're going to see 26K. We saw that 2 times. We lost it, we saw 26K. We lost it, we saw 26K. We lost it, we saw 26K. This level is going to be a major resistance on the smaller time frame, a price point we need to break back above to become range bullish again. If we do break above this level, we can expect the price to move all the way back up to retest the POC level. If we retest the POC level, guys, we do have that potential to actually move even higher, to potentially even retest the upper range that allows us to retest that downward sloping resistance. So a very important level to retest. The bulls want to take control on a smaller time frame. We already know they need to break over 28K, but if they want to take control on the 4 hourly, they want to take control on the current range, the key level they need to reclaim is going to be 26.4. 26.4 is the most important level on this chart. If that level is broken above, the price is going to be able to push higher, potentially through the POC and potentially back up to retest those levels. Until then, we are in a bearish trend. We are underneath 26.4 to 26.3, and therefore we are bearish, guys. This is a bearish move. This is a bearish price action. It is bearish consolidation. So let's talk about the next immediate move of Bitcoin. Where is Bitcoin going to go? So as you would know, over the last few days, volatility has been very low. There's been a lot of compression, a lot of consolidation. Bitcoin had basically no reaction to CPI. In fact, Bitcoin had a small reaction to CPI. We saw a relatively strong move, I guess, 0.8% towards the upper resistance zone of this rising channel. You can see we have a few levels identified for you. We have the 26.4K level here, represented by that large spike in the VRPV. This represents a liquidity zone, right? This represents a liquidity zone. An area of historical orders is more likely to be an area of future orders. So therefore, it is an area of liquidity. We touch that area of liquidity, we grab topside liquidity, we move toward the downside. Since then, we have been consolidating upwards in a rising channel pattern. This is a bearish structure. A rising channel pattern represents a upward trend that is weakening, a uptrend that is expressing weakness or decreasing momentum, decreasing velocity, decreasing volume, all of which we have proven, all of which you have the data to see for yourself. Looking at it from a structural perspective, if we take a measured move from the breakdown upwards, we can see the measured move is actually targeting this level of liquidity just underneath 25.5. If we do lose that level again, we are most likely coming down to retest 25.2. So for the short term, the bears still have strength. The bears still have strength on the short term. Now, we do need to break back below 25.8K to see volatility and volume pick up in favor of the downtrend. Until then, we are sitting between 26 to 28,000, which, as you would know, is going to be that higher time frame support. If we go back to this chart, you can see that higher time frame support right over here, and go back to the daily chart, and you can see that higher time frame support right over here. So if you want to see the momentum pick up, we want to see the price move strong to the downside, we do need to see that drop below 25.8. Now, additionally, we did see momentum actually shifted negative. You can see where the uptrend over here, as per the RSI, that relative uptrend is actually relative to the uptrend on the structure, therefore a validated uptrend. We can see we actually broke toward the downside. Even on this move over here, we can see momentum is actually not flipped positive yet. Therefore, this move is expected to be a weak move, or a move that is expected to reject back toward the downside. If we do continue this momentum move toward the downside, we can expect inevitably that this price will follow downwards, potentially retesting these lows. Now, can the bulls invalidate the structure? Absolutely, the bulls can invalidate the structure, but again, the same thing we said on this chart here. For the bulls to invalidate the structure, for the bulls to reclaim control, 26.4k needs to be broken above. Now, if we go back to this chart over here, we can see that same area of resistance, that same liquidity zone represented by 24.6k. We do need to get above 24.6k. We need to push into this gap over here and fill that gap, and then come back and retest that area of support. A very unfortunate scenario would be a rally up to around 22.6 and then a rejection back down. We do need to see 26.4k, if broken, held above, to see any sort of move back up to retest that POC. If we do zoom out, we can see we do have a downward trending resistance. This downward trending resistance is reflecting the downtrend in the current structure. This level inevitably does need to break for the price to move upwards. And as you can see, if we do break that level, we are going to be retesting that upper resistance. I'm going to leave the video there. Thanks for watching. If you've got any questions, leave them down below. If you want more information about the correlation between stocks and crypto, if you want a more logical explanation, a little bit of a better explanation, but sometimes I butcher things when I'm talking too quickly, go ahead to our Telegram channel. We talked all about it over here. Very concise, very precise, and very easy to understand. I explained it all in these posts. And you can go ahead and read that over if you want a little bit more clarification on that, or if you're a little bit confused about what we discussed. Definitely recommend checking it out. As well, check out the Crypto Academy courses if you want to learn and trade. Myself and Bulls of Crypto have created this course. It's a 10-unit course to teach you guys everything from beginner TA, market structures, and risk analysis. Particularly if you're new to trading, this is it for you. Thanks for watching. See you tomorrow.